Hello folks, welcome to Pro Trader Strategies Market Commentary for Friday, March the 5th. I'm Eric Wilkinson, and you very well may recognize me from mainstream media where I've talked about the economic data, the geopolitical environment, how those come in to impact the markets with some of my market analysis. I do the same thing for you folks in these market commentaries, but I have also streamlined the process for you folks to follow in order to find the optimal option strategy for any given assumption you come up with. So check out our webinars at protraderstrategies.com to find out the full details on those specific strategies so that you guys can know intuitively which strategy works the best for any given situation. It's not just a bullish assumption. We pick a long call. No, what we're doing is looking at what's going on with that. Yes, we start out with an assumption and then build from that. So please check those out at protraderstrategies.com. And without further ado, let's get on with the economic data. Across the pond, we got French trade balance negative 3.9 billion, right in line with expectations, maybe slightly lower than that. German factory orders higher than expected at 1.4%, expected to be 0.4%, which is a bit surprising since we've seen a lot of these retail sales numbers come out worse than expected. Even in Germany, to see the manufacturing ramp up a little bit is a little bit of a good sign as far as I'm concerned, because usually those PMI, Purchasing Managers Index, for those manufacturers are the ones that are determining the rate of their process. So the purchasing manager sees the orders well in advance. This is a good thing. We've been seeing those PMI numbers doing pretty well, and that's obviously the reason, because those purchasing managers were seeing those orders come in. All right. Now, it is Friday, the first Friday of the month, which means that it is Unenjoyment Friday. The first Friday of every month is what we used to call it on the floor, Unenjoyment Friday, because we get the most important data point of the month. For the most part, at least the markets believe that. I think the PMI numbers are more important, to be quite honest, but this is the one that's widely looked at. So we got hourly average earnings coming in line with expectations at 0.2%. We also got the unemployment rate in line with expectations, actually a tenth of a downtick here at 6.2%, expected to be 6.3%. And the reason why it downticked is likely because we saw the employment change do very well. The employment change, meaning hires, was 379,000, expected to be 197,000. So knocking it out of the park by about 180,000 there. And then, remember last month's number, we saw that dismal number come in at 49,000, expected to be a lot higher than that. Well, they revised that 49,000 up to 166,000. So that number looking a lot better with the revision, obviously, there on that number there. So, overall markets, crude oil continues to just rip to the upside. Yesterday, almost unabated rally to make new highs. I mean, 52-week highs, folks. I mean, this isn't all-time highs, obviously. But today, we're breaking above that 65.43 area, which was the high right before the pandemic. So we are above that level right now. And most of it's probably still a little bit of that overhang from the DOE, Department of Energy number that we saw on crude oil. Remember, we saw a big build on crude oil inventories, but a massive drawdown on the flip side on the gasoline. So that's still driving demand for crude oil at this point in time. Gold futures off $6.50, breaking below that 1,700 handle. You know, I was touting the 19 handle well before I thought we'd break below the 17 handle, especially with the strength that we've been seeing here in Bitcoin. Yes, it is off $1,000 today, but Bitcoin has been pretty strong during this weakness we've been seeing in gold, which is a bit of a conundrum in my eyes anyway. All right, bonds, we're up 4 ticks. Well, that seems like a massive coup with the amount of selling pressure we've seen in the bond market as of recently. Are we finding a bottom on this Friday and maybe a turnaround next week? We're going to have to wait and see. Right now, strength in the bonds is kind of creating that bottoming pattern, but we have not broken this just serious bearish pattern where we have lower lows, lower highs continuing and just free falling to want to test this 153 area. It might very well hit that before we start seeing a real rebound in bonds. VIX. VIX is slightly higher here. We have the markets all over the place. It looked like we were going to drive higher into the close today, but we're seeing this weakness right now and below the 50-day simple moving average after just toggling above that, I'm going to call it, yesterday. Today, we're not even remotely trying to defend that area at this point. It looks like the rollover is almost sure to happen and maybe retest this 29,500 in the Dow where we bounced off of it before. And why do I say that? Because we're seeing this NASDAQ continue to slide and really just no signs of a bottom here, even with the market maybe coming back to the highs at the end of the day could make this setup look like a little bit more of a bottoming pattern. But at this point in time, any lower than from where we opened to where we are now is not looking like a bottoming pattern in my eyes. All right, E-mini S&Ps. Similar to what we saw over there in the NASDAQ, this pattern would normally look like a bottom if it were extended a little bit lower here, right? Because right now it really is staying to be, or continuing that inside the previous day's candle, which doesn't create a confirmation either way. It's really a continuation, to be quite honest. And then we can see what happened overnight with the equities, pretty flat. You know, yesterday, obviously, we talked about Powell was speaking. He's talking about the interest rates are not going to go any higher. The equities really started throwing a tantrum here. Coming into today, it was pretty bullish off of the non-farm payroll number. Remember, that comes out before the equities open, so there was strength on that number because it was really a good economic data point. But the markets flipped on this and have continued to sell off. With that being said, you know, the idea would be that if we start having a strong economy, they're going to start raising interest rates. Well, markets kind of slamming down today, trying to throw a bit of a tantrum on that. Well, PIN. Now, you folks remember this. We talked about this yesterday. I rolled the 165 calls in March out to the April 170 calls. Well, I sold those for $1.26. And we talked about that in the daily market commentary yesterday. Well, heading into my webinar, which I do on Thursdays, and we did it on the collar. Check that one out because it is great for a type of situation where we're currently in. And I probably should have put this on yesterday, but I don't like to put on trades right before my webinars because I don't like that feeling of maybe thinking it's a pump and dump kind of thing or whatever. I'm trying to get in before everybody else. I like to do the webinar and then put it on today. Well, we're down 10% almost in PIN today. Just a big, huge sell-off. And anyway, with that being said, those April 170 calls, I sold for 126. I covered them for 90 cents. Why? Because I was talking about the collar and was going to tighten up my short call and my long put, get those pretty close. As a matter of fact, I was looking at the 100 puts, or actually buying the 100 puts and selling the 125 calls in there. That would have been great today because the market's selling off. I would have done very well on that collar. I wouldn't have tried to assign it or anything like that. I would have just taken advantage of the move and the P&L that it would have created from that move. But with that being said, I covered those 170 calls that I sold for 126 for 90 cents. So I only collected 36 cents on that trade. Why? Well, that put me at a cost basis of negative 10 cents, which means I own PIN for free. All right, by lowering this overall cost basis, rolling the 85 calls out to the 90 calls, out to the January 120 calls, out to the February 140 calls, and out to the March 165 calls, and out to the April 170 calls. Staying mechanical with that trade. I've lowered the overall cost basis on this trade by $5.59, where I bought it at $4.49, folks. So that's why I wanted to put this collar on there, because I'm playing with house money. I'm going to have to wait for a little bit better, maybe hopefully a bit of a bounce here, but yesterday was obviously the day to flip into that into that collar to take advantage of this type of a move. I would have capped out at 125 on the upside and been in that range, but it would have also protected me and locked in my gains at least 100. And you can see, obviously, we're trading below that at this point in time. So putting that trade on when we were in the mid 110-ish area would have been the perfect scenario for something like this. Missed that opportunity. I'm going to probably hold off, wait and see. But that is still going to be something I'm very interested in implementing around a trade like this to lock in some of these gains. Because like I said, you buy something at $4 and it's at $100. For every one lot you've done, that's $10,000. All right, so I'm not going to shake a stick at that. And it's easy to figure out your profit on this, right? When I have a cost basis of 0, I can just figure out where the underlying is trading. All right, so with that being said, if you haven't seen that webinar on the collar, check that out because I walk through all of that process with PIN as an example. So please check that out. I go into a little bit more detail than what we're going to really cover here. But I wanted to talk about that covering of that PIN covered call trade. I am just outright long right now and haven't added anything to it. But a great example, real life example of how you lower overall cost basis on an underlying that's basically gone from $5 to $130 in under a year. Most people would say that you would not be able to do a covered call strategy around that kind of market momentum. I show you in this video exactly how that's done according to our rules. So check that out. That's all I got for you folks. Other than we do need to take a moment to go over our disclaimer. So please pause at the end of this video and check that out. And other than that, have a great weekend. If you can't take that, take it easy.